Good morning, good afternoon, good evening, and welcome to the Bull versus Bear webinar. Here, Steve Miley on the call for trade day on TGI Friday. Thank God it's Friday. The 14th of October. Welcome everyone. Just to confirm you can hear me. I've had a few technical problems. That's why I'm running a little bit late. Can I get a yes if you can hear me, or just someone type in we can hear you, Steve? Would be useful rather than me talking and no one being able to hear me. So just to confirm you can hear what's coming through, someone type in the chat for me below the video that's streaming in the members area. That would be appreciated. So, I'm going to go for our usual regular run through in here. We'll take a look at what we had, what we've got coming up. Clearly, all the focus, actually not all the focus, most of the focus on CPI. We also got some stuff going on in the UK, which we'll look at as well. And then we'll also take, I'm just going to type in the chat actually because no one's responding. So I'm getting a bit worried because I've had a pop up, we've had some issues come through in here, but I think it's all okay. You can hear me, guys, right? Yeah. I'm going to just type in the chat just to make sure, but hopefully you guys can hear me. So we'll go through our usual regular run through. We'll look at definitely obviously the CPI data and the aftermath of that is clearly super important. We'll also take a look at what's going on in the UK. We'll take a look at what we've got coming up today, and we'll take a look at the charts. We'll take a look at also the articles from the major newswires. Let's look back before we look forward. CPI data. So all of it pretty much coming in above expectations. You can see in here the month on month was at 0.6, expected at 0.5. It was 0.6 last time. This is the core, excuse me. And the core year on year. Thank you, Jason. The core year on year, 6.6, up from 6.5. That was the highest since, for decades. 1982, I think I put in a report this morning. And then we had year on year on the normal CPI number, the headline number 8.2, up from 8.1. The peak previously was 8.3, and then 0.4. On the month on month, expected at 0.2. So all the numbers were above expectations. So no surprises. The market sold off, right? Equity market sold off. We went into risk off, expecting a more hawkish Fed. So bonds were lower. Bonds lower in price, higher in yield, higher long-term interest rates because the Fed expected to be more hawkish because of the higher inflation. Stocks lower, inflation bad for stocks, more hawkish Fed, bad for stocks. And oil lower in here. Potential a more hawkish Fed equals then potentially slowdown, bigger slowdown and recession in the global economy, the US economy, the US and global economy, negative for oil. So all the risk assets, and gold went lower because the dollar's up. Now, gold is obviously usually a safe haven, but gold at the moment is very much correlated to the US dollar, and the US dollar is seen as the only place anyone wants to have their money at the moment. Okay, so in this very hot inflation, potential recessionary world. So the US dollar strengthened and gold went lower. So all as expected. However, a massive intraday turnaround. I mean, just huge. And you know what? I don't usually go out of my way to post in the chat, but I'm going to just jump to the chat. Hopefully it doesn't go to, does it go to the members area? No, we're good in here. So I posted this in here last night. Oh no, is it going to happen? Oh yeah. Okay. So look, I don't usually come in here. Aggressive reversals across asset class after Thursday's key US CPI signals a possible major shift to risk on. Stocks, oil, gold, all up, US dollar down. Could be a big day Friday, helmets and goggles. Okay. So, yeah. And then James has kindly asked, shifting away from risk-off assets, so less risky assets. I actually cover that exact topic in the lesson here. So James talks about it in the lesson here below. So, but yeah, I don't normally post this stuff. You know, I do various other things outside my job at Trade Day. As one of the owners and founders here, and I also obviously I'm an analyst and I also trade for myself and blah blah blah. But I also do some advising to some funds, both long-term funds and hedge funds, and I really think there's a really good chance, you know, and I've said this, that could be the bottom. I really do think that could be the bomb. And I've been doing this a long time, guys. What we saw yesterday, I put it in an article this morning. That turnaround that we saw, let me go and just grab it's the fourth largest intraday turnaround, right, from a low up. So it was the S&P was 2.4% down and ended up 2.6% up. It's the fourth largest in, I think, the S&P's history, right? We're talking way over 100 years, right? Intraday turnaround. Well, whether they got the high-low data going back that far, I'm not sure. But they've certainly got it back going multiple decades. And it's the biggest intraday turnaround from a low to a high. Sorry, the fourth biggest in history. And the fifth biggest in history for the S&P. And the fourth, let me double check that. I've got it. And I'll pop it into the chat. Where are we? I'm trying to find the quote. Fifth largest intraday reversal from a low in the history of the S&P, and it was the fourth largest for the Nasdaq. Obviously, the Nasdaq hasn't got as much history, but I will stick that in the chat. Okay, there's that quote. I mean, that was a stat, right? I mean, that's just massive, guys. I mean, absolutely massive. These turnarounds like that. I've been doing this a long time. Don't happen that often, and for it to come on a day where we had super bearish data. Well, it wasn't super bearish, right? But the market kind of took it as very bearish. It wasn't aggressively bearish, if we go back to the data, if you look, okay, they were all above expectations, but not massively. But, probably was oversold, but on the day, given how much the market wasn't particularly, but the market was setting up to be sold, right? It wanted to be sold. Every single poll, when we've gone through these, like the Bank of America Fund Managers Survey, everyone is super, all the long-term players, all the hedge funds are now short, right? The hedge funds are all short. All the long-term money is underweight. Every day trader you speak to is uber bearish. We've been in a bear market for almost since the beginning of the year. So we're very elongated for a bear market. It must be said, bear markets are usually short, right? Bull markets long, bear markets short. So we're into, I don't know what you want to call the top of it. The top of it, really, the top of the market was back for the Nasdaq. It was the end of last year. So we're getting we're way over 9 months into this. That could easily be the bottom. I don't get this, either bullish or bearish on stuff very often. Every few years, and I honestly truly believe that could be the bottom for the market. The fact that you had a huge piece of data, the market reacted, rejected. And then for you guys as day traders, doesn't really mean anything, right? What it does, what am I going to do for the next 10 minutes for you guys, right? But I just want to make that call to say that could easily be the bottom. Okay, and so if you got, you obviously, I assume you guys invest as well. If you've got long-term money to put to work, I think now's an opportunity. I mean, there's still plenty of people not calling it the bottom, which is good. If they stay bearish, good. If we go in here, there are some articles in here, but we'll come to it shortly. And there's loads of reasons given. Was the market over? Really, it's just positioning. The market's overly short or underweight, massively overly short or underweight. And people sold into the hole and got squeezed out yesterday. And there's plenty of long-term money sitting on the sidelines waiting to be put to work. I think we could have a really big update today. I really do think that. So anyway, let's go and take a look. So I spoke about that. I'll put it in the chat. So that's looking back to yesterday. That was the data for yesterday. Let's take a look at what we've got coming up, and then we'll run through the articles in here. So we'll go to today. It's fairly light. We do have retail sales in about 50 minutes. So the market's going to watch that, obviously. Let's see. If retail sales is positive, if it's kind of just, you don't want it to be too hot. You want it to be, if it comes in line, this is the thing. Retail sales is hot. The market will take that as well. Retail sales is hot. Inflation is hot. Consumers strong. And the Fed are going to be more hawkish. So, perversely, a strong retail sales number, which is effectively showing a strong economy, could be bad for stocks, or will probably be bad for stocks. You want it to come in about in line. If it just misses at 0.1, that's probably good, showing that the market, the consumer, the economy, and the consumer is slowing without it being too damaging. So excuse me. If you want to make a bullish case for stocks and stock indices today, you're probably looking for this number for the retail sales to come in line or slightly below expectations. You don't want it too below, because then that's going to show recession, and market, we don't want to see recession. What we want to see is slow down, soft landing. So a gradual, so on this number in here, the month on month for September, we were 0.3, expecting previous 0.3, expecting 0.2. If it comes in at 0.2, 0.1, I think that gives the market a green light to rally. We've also got Michigan consumer sentiment. Don't forget that. It's often overlooked. That's at 10 a.m. Eastern. Can have an impact on markets. Okay, so retail sales in about 50 minutes, just under 50 minutes. Michigan consumer sentiment at 10 a.m. Right. Earnings calendar. We're in earnings swing, right? Let's take a look at the earnings calendar. Remember to do the filter here. I've only got the US ticked, and I'm going to tick the 3 boxes. We need to put that as a default, but whatever for now. We'll leave it for now. So what do we have? Most of it's out. In fact, it's nearly all out. Look at it. Sea of green. The only miss in here, and it's a slight miss on the revenue side for Morgan Stanley. United Health, JP Morgan, Wells Fargo, apart from the one piece on Morgan Stanley, all of these big boys at the top in here, all beating expectations. So they're positive in there as well, right? Got Citigroup, as far as I can see, that's not out yet. I haven't seen it, so we're waiting on Citigroup. So let's see what comes from Citigroup. Let's take a look at some of the articles now. 5 things today. We'll talk about the UK as well. So bets on Federal Reserve rate hikes. You got a possible UK U-turn. This is the thing. Cheers, markets. Okay, so in the wake of it's hotter than expected inflation, short-term interest rates, markets are now expecting the Federal Reserve to deliver back-to-back 75s. Let's go take a look. Fed tool. So now look, remember this column was over here before, because we had an outside chance over here of a 50 basis point hike at the November meeting. Not anymore. We're basically nailed on now for 75, and there's even an outside chance over here. This is a whole point higher. If we look at the December meeting now, you can see in here for the December meeting, we're looking at to be a total of 150 up by the September meeting. Now is the greater chance. Okay, so if we go look at that, the 450 to 475 for December. If we go look at the historical. I'm going to have to get rid of all of this, which is so annoying, but we'll go through. So it's the last one, the 450 to 475. You'll see. So this is now the basic pricing in 275s by the 2 meetings time. Look, boom, up at 60%. Highest it's been. Okay, so we were up until yesterday looking for more likely 75.50, right? Now we're looking for end of year 75.75. So we're looking for an 150 to be added on. Okay, let's go back to where we are. Okay, let's looking out to the peak now. Peak 475. The peak has been pretty much around 475 to 500, right? If we go out now, and now look, if we're looking here, we're looking at end of year getting close to that 450 to 475, and then you've got February, maybe then another 25 on. If we go further out, 475 to 500, 475 to 500. So the peak is in the same place. So all we're saying, all the market's pricing in now is that we hit that peak sooner, right? We're going to hit it by maybe closer to the end of the year, maybe early next year. But the peak's in the same place, 475 to 450. And if we go out towards the back end of next year, though, remember we were looking for a cut. There is an outside chance. So look, 475 to 450 is the peaking rates here. Okay, this is out to September next year. If we go to November, so just over a year's time, it's at 450, 475. So the market's starting to price in the first rate cut going into the end of next year by around November. Okay, but let's go back to where we are. So basically what it's done is it's brought forward the rate hikes in here. So we're now looking at, with the possibility of 100 basis points in November. Well, possibility, we just looked at that. It's not really a possibility, because what is the actual possibility for the November, for the 100? There it is there, look. 0.4. Okay, so it's not really much of a possibility. They're pricing it up. Yeah, that's right. Okay, so not much of a possibility really. Okay, let's go back. So yeah, what else we have in here? UK's financial drama, right? There's the Kwasi Kwarteng is actually right now. He came back early from Washington. There's going to be a press conference by the Prime Minister Liz Truss later on Friday. She's expected to row back on her fiscal plans, and there is a lot of talk from the Times that Kwarteng is going to be sacked. Okay, and he's in with her now. He arrives. There's an article up here. We'll go through the articles in a second. He arrived at Downing Street, which is where the Prime Minister resides. So it looks like he's going to be sacked. He's going to be the scapegoat, and they're going to unwind everything that caused all of this chaos. And now remember, it's important. I've highlighted how it's been important. So this is allowed for, if we go and take a look at, and again, we spoke about these gilt yields, right? If I go and get to the gilt chart, I know this takes me a little bit of time in here, guys, but do bear with me because it is important. There's a massive turnaround yesterday. This helped because there were these rumours were coming out yesterday that the government were going to back off. The Bank of England were going to remember the Bank of England put those emergency measures in a couple of weeks ago when everything went bad after the tax cut plan was put out. The Bank of England stepped in, but they only promised to be buying bonds until today. Today's the deadline, and they've stuck by that deadline. And that's almost then pushed the government into the position of having to move away from this plan, okay, because it's been so badly received. So if I just scroll to the bottom and we'll go to the UK, we'll see this turnaround. Remember, we looked at this a couple of days ago. So we'll go to the UK. We'll just pick the 10-year, it's like a benchmark. So this is important, guys. And this helped yesterday. This definitely helped yesterday. We got a big a surge higher in gilt prices back to lower yields. So if I go to a technical chart, it's loading, and I put it on a candle. Look at this. So remember when we spoke about this a couple of days ago, we were making new yield highs. Remember, this is a yield chart. We're making new yield highs. Here we go, making new yield highs, and then we got a turnaround, and that's yesterday. Boom, lower in yield. Boom, lower in yield again today. Double top pattern, right? Which is actually a double bottom for the bonds, right? You've got a double top in yields setting up. Obviously, it's got to go down through this yield low, but nevertheless, look, massive. We moved from like a couple of days ago, 4.6% to like around 4%. So, 6.6% lower in yield in a couple of days in here. This helped yesterday, right? This helped the turnaround rebound we got. Look, the rumours here that the government's going to turn around, that Liz Truss is going to turn around on the tax plan and the fiscal plan, and potentially the Chancellor, who's like the Treasury Secretary in the US, is going to get sacked. Okay. Peak pain, question mark, right? A post-CPI whiplash in US stocks, which ended Thursday high after a spectacular rebound. So some traders wondering whether the worst is behind us, right? So this is all then looking at is hot inflation torches bears in a stock reversal for the ages. Look, even they're using that kind of terminology. I do honestly believe this is a really big turnaround, guys. I can't stress that enough. So worst behind us. Is that now peak inflation? Yes, it was higher than expected, but is it now just... Is it going to just plateau here, or is it plateaued? Plateauing is good enough for now, and then obviously what we want to do is to start seeing it fall. Okay, earnings ahead. Well, we've had a lot of those earnings already, right? And we've already gone through those. Retail sales Friday. So, right, let's have a look at some of these. So, hot inflation torches bears in a stock reversal of the ages. Tick index has unprecedented wild readings in both directions. Short sellers panicked and started buying. Okay, there's a load of articles in here. I'll just share this one. I don't know if you guys have got access to Bloomberg, but you know what? There's a load of I scrolled down through. There's back-to-back articles down through here, all talking about what's happened over the last 24 hours. And it's good. There's some good stuff in there. But yeah, all of this looking, so US futures waver. So we're kind of up in here this morning. So what do we have in here? US futures waver before earnings rush. Bonds gain. Bank of America strategy see more pain in store before stocks reach low. Well, you know what? That's Michael Hartnett. I know Michael is a really nice guy. Stocks to bottom in 2023 after Fed pivot. I don't know. I think maybe maybe it's happening now. I think maybe it's happening now. But he's a longer term strategist. So there you go. Hot inflation torches bears. We've already covered that one. Okay, UK, the US crisis is threatening the global inflation rate. Well, it is, right? So, this is the problem. It has, and we've spoken about this before. It's seeing higher yields being from the UK high yield move that we saw has pushed yields higher. But yesterday's turnaround has helped. UK's trust to reverse part of our economic plan later Friday. Remember, they've already partly started to reverse it anyway, right? To U-turn on planned tax cuts, okay? Embattled Prime Minister to hold press conference, and all the rumours are that I'll come to that one shortly. That needs to go down there. 1 sec. But all the rumours are that he may have even been sacked. Now, look, UK Finance Minister quite to be sacked. That's from the Times in here, and he had just arrived. British Prime Minister trusts to hold press conference. We've already gone through a lot of this. UK gilts soar. We've already looked at the yields. They've gone up in price, down in yields. Reports on Truss U-turn on tax plan. Again, all driving this high. And this helped yesterday. UK's quoting arrives at PM Truss's Down Street office. That was updated 12 minutes ago. So since we've been on the, actually no, that was before I went on the call. Let's see. Yeah, but I mean, he's in there now. Maybe sacked already. Who knows? And what else we got then? Just looking at the overnight. So remember, US stocks continued higher right the way through the session. The European exchanges close, in the mid afternoon compared to the US. So in here, this is the follow through, right? So these are playing catch up. This is why these are up, okay? So they're up about 1.5%. The European cash exchange this morning. If we go take a look at yesterday, so we were up about between 2.5% to 3.5%, depending on the index yesterday. And if we go and look at futures this morning, we've followed through. We're only a slight follow through. Nasdaq was a bit higher than this morning. It's pretty much unchanged. We're about 1/3 to 4/10 higher on the S&P and Dow. Okay, quick nod to the charts, but for me, it will be a quick nod to the charts, guys. But I mean, look at that candle. That's a massive candle. I know you've had these big down days as well, but the fact that it went down, and that's a down, almost a straight line down day. A reversal day like that is absolutely huge. This day encompasses, 1, 2, 3, the prior 3 days activity, right? It's a massive, massive update. I can't stress how big a turnaround that is, right? And if we go and take a look at trend line that comes through here, we're not through that trend line, but look, gone up and flirted with it this morning. Okay, I think there's real potential for this thing to fly today. Yeah, and there we are. There's the sell-off. There's the rebound. There's the overnight follow-through. Look, dip and a bounce though. Already a dip and a bounce. Very hot, what I would class as high-level consolidation. If we go and put a fib on this, right? Look, we've held pretty much at the 23.6% retracement. Okay, pretty much on that 23.6% retracement, which is going to come in around the current setback low there, which is, so whilst above 36.60, I would 100% be playing this from the long side. Is that the low? Yeah, 36.60 and a quarter. I would certainly be playing this from the long side. If it breaks here, could be down to the 38.2. You got a little swing here as well on the 38.2. Well, that's down at 36.30. So break at 36.60 opens up 30 index points to the downside. But for me, this thing could fly again today. I really do believe that. And the same on the Nasdaq. Look, from a new low, massive update, massive turnaround, and then we step into the 15-minute chart. Again, look, dips. There's the rebound. There's the overnight setback and rebound. Yeah, we're dipping right now, but again, if I go put the fib on, where have we held so far? You have undercut the 23.6. You've got a couple of lows in here. It's just undercut these lows, but back below the current low. I mean, yeah, go short below the current low, but while it's here, all of this looks bullish to me. I'm going to do a very quick nod to some of the non-equity markets. Let's take a look at the dollar index first of all to show the turnaround. This is across asset classes, right? Look, big failure pattern there, right? Big bearish outside pattern. Okay, big negative. Okay, we've bounced on the dollar, but potential for this to be a part of the topping pattern from the previous sell-off in here. Failed below the previous high. We go look at the treasuries in here. Big sell-off, big rebound, and pushing back higher today. And again, if we go and look at if I redraw this, it will allow me. No, it's not going to allow it. I'll just get rid of that. But we redraw the trend line. It's a great little trend line actually through here. We're some ways away from that, right? We're some ways away from the trend line there. But nevertheless, a big strong turnaround there as well. So it's across asset classes, right? And then again, strong rebound and gold. Gold actually looking a little bit weaker. That's because that turnaround in the dollar. Go back to the dollar. See the dollar rebound? Strong dollar rebound in here. And so gold looking a little bit more vulnerable with the setback this morning on the daily chart. But go to the 30-minute. It has setback and it is bouncing. So again, prefer to play this from the long side for gold and take a look at oil. So setback and a rebound for oil. Again, oil more negative, setback in here. Yeah, I'd say that's more negative for oil. Still got lower lows and lower highs. Not as emphatic for gold and oil as you saw on the stocks. A little bit trickier on that one. I'm going to wrap it up there, guys. Yeah, I think I mean, I'm not guaranteeing an explosive day, but I mean, I really do feel that this could fly again. It won't happen until you get the data out of the way, but it could come through after the open. After that day we had yesterday, we could get some real money being put to work. If we get some real money being put to work on a Friday, this thing could scream to the upside. All right, I'm going to wrap it up there. Have a great trading day. Have a good one. And I'll be back with you on Monday. Have a great weekend too. And stay safe out there. Helmets and goggles on. Cheers, guys.